So at the beginning of any year, we like to get our crystal balls out and foresee what's going to happen in the next 12 months. Because we love to forecast, we love to have certainty about things. And the usual suspects, the experts on the news channels, in print, on the internet, are forecasting what will happen to equity markets, what will happen to geopolitical events, etc. So Chris, what does 2026 hold, in your opinion?
Well, that's a slightly different question, isn't it, than what's our forecast for 2026? I think, as you said, our crystal balls are a little bit opaque. They probably need to be polished a little bit, but what we can guarantee is whatever we forecast is going to be wrong. That's the only certainty. Whenever any investment manager used the phrase experts there, in fairness, whenever so-called experts, I stand corrected. The so-called experts, you just know full well that even though they've got good intentions, you can guarantee they're going to be wrong. It's not their fault. It's just human beings are not very good at predicting the future because guess what? We haven't got a time machine.
Well, there's a lot of overconfidence as well when those forecasts come to play as well. So
I think, I mean, I'm being flippant in my reply, but I think the sort of generic answer to your question is very likely what will happen in 26 will not be a repeat of what happened in 25 because that is a forever accepted norm for investments. In 2025, would we have anticipated the UK to perform better than the US? Absolutely not.
Those that looked at relative valuations might have had a bit of a...
fair point.
The probability might have been higher than that. I mean, you're talking about past performance with 2025 not going to be like 2026. I mean, we can guarantee the markets will go up, they'll go down, and they'll go sideways. So what magnitude and the timing of that, unfortunately, that's the realm of astrologists.
Yeah, exactly. And I also think the impact that geopolitics has is overstated in the long term.
It is, of course.
It obviously has an impact on the short term. And this is another fundamental from investing. You know that markets are going to overreact either on the upside or the downside. They're going to over-panic when things go wrong, and they're going to get over-excited when things go well. And as long as people remember that in the short term, and to a certain extent, ignore the noise, don't follow the squiggle, then they'll be fine.
Well, it's very difficult to ignore the noise because it's quite loud. But actually what we've seen, the markets got used to geopolitical shocks.
Yep.
And incorporated that. So after Liberation Day
they happen quite often though, don't they?
Well, they have to incorporate it. After the Liberation Day shock and then quick recovery, the feedback loop to the markets is, uncertainty and volatility is a function of that, and recovery is quick as well. So they incorporate it. News flow is very quick. They incorporate it and then make a call on that. But the whole pivot around US as seemingly the leader of the free world, and is that been called into question? Markets don't care.
No.
Frankly, they care about the fundamentals. They care about noise and speculation in the short term as well. But actually they detach themselves from that. So clients shouldn't overly focus on things that aren't actually going to actually matter in the long term.
No, and to answer to your question, what we think the forecast is going to be 26, anybody who tries to convince somebody that they know what's going to happen in 2026 probably shouldn't be listened to.
You definitely shouldn't be listened to. But also, a nice little game to play is to look at their forecast from 12 months ago.
Exactly.
And see how much their point forecast for the S&P, for the FTSE. Actually, life has got a wide band of possibilities, not a point that it's going to be like that.
No, exactly.
Actually, that's overconfidence to the fore as well, because actually there's a strength in saying nobody knows what's going to happen.
Spot on.
But actually, if you're invested for the long term, the probability of very good outcomes is higher.
Diversification's boring, but it works, doesn't it?
It does work.
Yeah.